Okay, so hey everyone, and I hope that you are all doing great. Well, I wasn't feeling well for a while. I was facing health issues from the past few days, so I wasn't feeling well for a while, and I could not trade properly. But today I feel good, and I think I'm better than yesterday. So I decided to start recording of our lecture number one. So before we start, let me share something. This is my first time. I did not record any videos or lecture before, so if I make any mistake, I sincerely apologize in advance. I will try my best to make everything as clear and valuable as possible. But if any point you don't fully understand something, watch this video again and again until it click. Remember that repetition is the key. So pause, note, and reply until you truly understand everything I explain in each lecture. Now, let me tell you something straight about this mentorship. Trust me, if you give your full focus and dedication to this mentorship, if you study and truly understand every single thing I share with you all in this mentorship, you won't need anything else after this mentorship. This will be your last mentorship, the one that will finally give you your age. And let me tell you about an age. I hope you know, but if you don't know, let me tell you something about age. When a trader find their age, everything change. That's the day you stop chasing other. You will unfollow everyone. Even when you get your age, you will unfollow me. Then it will be you versus the market. You will stop asking for signal setup or analysis, etc. You will stop copying others, because when you get your age, you will see the market through your own lens. You will finally understand how price is delivered, how structure and form, and why the market move the way it does. And this is the most important part of your trading journey. Remember that a trader become mature when he find his age, and trust me, that age is everything. Now let me tell you something short about an age. All right, so what exactly an age? So your age is your understanding, it's your logic, your reason, and your advantage in the market, and that's what separates you from other. It's the unique combination of knowledge and clarity that allow you to see what the most trader can't. There is a famous saying that only 5% of people are profitable. Only 5% of traders are profitable. Remain 95% of traders are in loss. And if you ask me, I would say that only 2% of people are profitable. The 3% are those people who sell courses, who are earning through referral link, through commission, etc. So when you find your age, you will start creating your own model. Um, you will start you will see your own trading style, and like you never see before, you will start 2 3 perfect trade every single day. You will predict the move before they happen, because you will know what the market is trying to do. Always remember that the market is not random. It delivers specific move, specific time of the day, specific time of the week, specific time of the month. You just need to know where and when to look, and that's what we will learn here in this mentorship, step by step. Okay, now let's come to our main topic. So no matter what market you trade, forex, crypto, stock, indices or synthetic indices, they all have one thing in common: they are all built on candles. So every chart you open, every move you see, every asset, every pair, it's not but a series of candle forming, reacting and telling a story. So we as a trader make decision based on how this candle behave. We predict the next move through the previous candle, through the open candle. We see how each candle open, how each candle react, and through this candle we predict the next move of the market. So if the entire market is built on candle, then to understand the market we must first understand the candle, because our whole market is based on this candle. And that's why this mentorship is called CRT, candle range theory, because it's all about understanding the secret of candle. Now let me tell you about CRT. I hope you know about CRT, and if you know me before 5 months, 2 months, or before a year, then you will know about CRT. But if you don't know, let me tell you about CRT. So the question is, what exactly is CRT? So maybe you hear the word CRT before, but today you are going to learn it in a way like you never seen before. So CRT stand for candle range theory, and it is based on simple but very powerful idea. Every candle has its own range and theory, and theory behind the range, and that's what CRT says. CRT says that each candle has its own range and theory, and when you understand the range and theory, you will stop seeing random candles. You will start seeing logic, structure, and intention behind every move, behind every candle. Let me tell you first, let me tell you something about the range. We will go step by step. I know there will be advanced trader as well in this mentorship, but there will be more new trader in this mentorship, and that's why we will start through basic. All right, so what do I mean by range? Every candle, whether it's on H1 or H4 or daily time frame, has a range that define its boundaries. For example, mark the high and low of any H4 candle. So when you mark the high and low of that candle, now switch to M1 time frame, you will see an entire story folding inside that single candle. There will be liquidity grave, breakup structure, MSS, shift of structure, all these things happening with that one H4 candle. And that's the beauty of candle. So every candle consists of its own internal structure, its own mini market, its own story, its own battle between buyer and seller. So when you learn to read a candle as a range, you will unlock the ability to read the market like a book, page by page, candle by candle. Now what do I mean by theory? All right, theory. I am using my iPad, and I am not much familiar with that, so I hope it will be okay. I will try my best. Now let's talk about theory behind every candle. So nothing in this market happen randomly. There is no luck or coincidence in price action. Every single candle that form, every wick, every sweep, every close is coded, controlled, and delivered by algorithm. So the market is not emotional, it's mathematical, it's precise, intentional, and logical. For example, there are a few type of candle you see anytime at the market, like a candle that sweep the previous candle low and close above the previous candle high, or the one that take liquidity and close strongly at the opposite direction. So none of this candle is random. There is always a reason, a logic, always a reason behind every candle or behind this candle. So in this mentorship, I will prove that to you step by step, chart by chart, live in front of you, that how each candle has a range and theory behind this range. Okay, so now let's come to our candle range theory. So every single candle in the market has only two possible outcome. Every candle you see in on the chart has two possible outcome. A candle either close above or below the previous candle high or low, or it will sweep and close above or below the previous candle high. That's it. That's two possibilities. There is no third option. Now pause for a second and think deeply. The market only moves in these two ways, and you just master one of them. Would you really need anything else? I don't think so. You won't need anything else, because trading isn't about catching every move or every candle. It's about catching the right move at the right time. So you don't need 10 trades a day, you just need one or two perfect one, and you will find this setup again and again every single day once you get your edge, once you understand this foundation. So this is what we have just discuss about CRT. This is where everything begins, because if you don't understand what a candle really represents, you can't understand what the market is truly doing, whether you are a beginner or an advanced trader. I want everyone to start from zero. Think like you don't know anything about trading, about technical analysis. Forget everything for a while and see the market with the new mindset and this mentorship. So from here we will move towards how a candle form, how it react, how it manipulate, and how it deliver. We will study everything in this mentorship which you need to become a proper trader. So everything we will study from now, all example, all model we will study in a monthly candle. So first we will start from a monthly candle, then we will study weekly candle, like how a weekly candle form, and then we will come to intraday, because CRT is not just a concept, it's a complete framework for understanding how the market truly move. And trust me, once you understand the logic behind it, you will never look at the chart the same way again. So only two things happen in the market with the candle. Every candle has only two possible outcome. A candle can either be close above or close below the previous candle low, or it will be wick above or wick below the previous candle low or high. There is no third option. There is only two options with every candle. It will either be close above or close below, or wick above or close below of the previous candle. So if there is no third option, if there is only two options, so think for a while. If you master one of them, you won't need anything else. You can easily catch two three high quality setup with this concept. And in this mentorship we won't study one, we will study both with full detail. So now let's come to the next topic. We will study how a monthly candle form, and at the end of this lecture you will understand what exactly is CRT and how to trade CRT. Okay, so all right everyone, let's now talk about the candle itself, like how a candle form and how we can treat each or a single candle is arranged. So whatever we discuss here will be related to a monthly bullish candle. So now as an intraday trader, you might be thinking that why should I care about the monthly candle? Well, you are right, we don't trade the monthly candle, but it's always best to start from the top. And there is, trust me, there is a lot of logic and knowledge hidden inside that single monthly candle. You can make your bias, you can make your order flow clear with single monthly candle. So let's come to our topic, how a monthly candle form and how we can treat it is arranged. So remember that every single candle in the market, whether it's monthly, weekly, or even one minute candle, it's all built through 4 key phases. So let's go through these phases one by one. All right, so the first phase of every bullish candle is called the open phase, This phase is also known as accumulation phase. So in this phase the market usually stay inside a range. The reason behind this is simple. Institutional traders don't show much interest here. They are not ready to move the market yet. They are still accumulating order, and that's why you will often see slow movement, tight range and low volatility during this phase. It's it's the build up before the real move happen. So the second phase of every bullish candle is called the low, and this phase is also known as the manipulation phase. So this is where the real game begin. Institutional trader trap the trader who enter during phase 1. So in this phase the market usually drop to a higher time frame key level. It grab liquidity from the low, and this is exactly where institutional trader enter. They set their order, build position and prepare for the reversal, and that's why the low of the monthly candle is usually formed in this phase. This is one of the most important phase, because this is where the smart money enter, and the direction of the month is decided here in this phase. That's why this is one of the most powerful phases as well. Okay, so now the third phase of every bullish candle is called the distribution phase, or you can say trending phase or expansion phase as well. So in phase 1 the market is in range, in phase 2 it manipulate, and now in phase 3 it deliver. So institutional traders have already entered the market, and now they are pushing price toward their targets. So this phase usually create a strong bullish trend, clear structure, higher high and higher low. It is where momentum builds and the main move of the candle happen in this phase. So during this phase smart money hits their target and start closing partial as price reach their level or their target. Okay, so finally the fourth phase, the high and the close. So this is where the high and close of the candle are formed. So at this stage the market usually slow down again, just like in phase 1. Why? Because institutional traders are no longer involved. They have already exit most of their position. So the market move in a range, creating final high and close the candle. That's why near the end of the month you will often see price consolidating or ranging again in phase 4. So this was a small idea. This is how a monthly bullish candle is formed. So every candle, no matter the time frame doesn't matter, every candle go through these 4 phases again and again. And here is something interesting about monthly candle. Each monthly candle contains 4 weeks, and each week can be treated as one phase of that monthly candle. So phase 1 is equal to accumulation, phase 2 week 1 is equal to phase 1, and phase 1 is equal to accumulation. Week 2 is equal to phase 2, and phase 2 is equal to manipulation. Week 3 is equal to phase 3, and phase 3 is equal to distribution or trend continuation. Week 4 is equal to phase 4 high and close phase. So this pattern repeat itself over and over again. That's why I always say that the market is not random. Now yes, this can happen. Sometime the low might form in phase 3, and sometime the high also can form in phase 3, and sometime you can directly see trend continuation in phase 1. There are some exceptions, there are some situations. We will discuss those when we study the weekly candle in detail, but for now understand this simple structure. Phase 1 is equal to range, phase 2 is equal to manipulation, phase 3 is equal to expansion, and phase 4 is the high of candle or close of the candle. So you will see this exit pattern on every time frame, monthly, weekly, daily and even intraday. Remember that there is no alignment of time frame. You can align any time frame you want. The logic will be remain the same. And remember that a candle is a range, and within every range there are pages repeating again and again. So this is a short but powerful explanation of how a monthly candle form and how we can treat each or single candle is a range. This is where everything began. And now let me show you this on the chart, so you can actually see how it look and how a single monthly candle contain of all these spaces within it. So let's go to chart and let me show you that how actually you can treat a single monthly candle as a range, and how you can actually trade it. Remember that every bullish monthly candle happen like this. And let's go to chart. Let me show you how it look like on the chart. Okay, so all right everyone, now let's move to the chart and see everything we discussed so far in action. So let's see how a monthly candle actually form and how we can treat it as a range. So first of all, we have to mark the high and low of a bullish candle. Let me show you how you will mark it in your trading view. All right, so first of all, we have to mark the high and low of that candle that we are using it for big testing or example, etc. Alright, so remember that this is a single candle. As I told you before, that we will see that how we can treat a monthly candle as a range. This is just a single candle. Alright, so first of all, we have to mark the high and low of any monthly bullish candle. So once we mark that high and low of that candle, then we have to switch down to weekly time frame. Now watch carefully, you will start to see how each week represent one of the pages we have discussed before. So let me show you where is the page 1. So this is page 1 of the monthly bullish candle. Alright, this is the page 1, and this is actually the page 2 where I mark the low of that monthly candle, and this is the page 3. Alright, this is page 3, and one second, excuse me. And this candle, the highest candle, this is the last page of that candle. So excuse me, this is the first week of the monthly candle. So this is the phase 1, which is we discussed that the phase 1 will usually be an accumulation. I will show you in lower time frame that how that accumulation look like, but first we have to mark it. So this is the first phase of the monthly candle. This is the week 1 candle. Alright, and what we discuss in page 2, that in page 2 usually the low of the monthly candle form, and in page 2 you will notice the manipulation page dropping down to a key level. So this is the week 1, this is the low of the week 1, and who buy or who sell in week 1, they all get trapped by institutional trader in week 2. And this is here is our key level. So as I told you before, that you will notice the manipulation page dropping down to a key level, sweeping liquidity and forming the low of the month. So here it sweep the liquidity of the phase 1, and in phase 3 where the real expansion happen, you can see this is week 1, this is phase 1, this is phase 2, and this is phase 3. So price move aggressively in one direction is institution hit their target in phase 3, but I told you before that sometime you can see that the market has make it high in phase 3, or sometime you can see the low of the monthly candle in phase 3. It's not 100%. Remember that there is nothing 100% in trading. And finally the high and the close of the candle in phase 4, where price slow down again and the monthly candle completed story. So this is our phase 4. Now while I'm showing you this on the chart, I want you to remember what I explained earlier in the range section. So let's go to daily time frame for better understanding. Remember that I did not told you anything about entry, that how you can enter. I did not say anything about the entry. I remember it, but I won't say anything about the entry today. So this is our phase 1. You can see it's a clear accumulation, and this is our phase 1, and from here it's Monday, first day of the week. This is phase 2, clear manipulation plus distribution as well, and second phase of the candle. And as you can see, this is Monday, first day of phase 3, and this is phase 3 of the monthly candle, and here again it's Monday of phase 4, and this is last day of that monthly candle. So this is how a monthly candle look on daily time frame, and all these mark zone are phases. This is phase 1, the accumulation phase. This is phase 2, where the low usually from the market manipulate the phase 1 trader and drop down into a higher time frame key level, which I show you on weekly time frame as well, and then it continue a trend. So if you remember, I want you to remember what I explained earlier in the range section. If you remember that concept, so then you will instantly understand why we are coming down to lower time frame, because this is where you actually see how the internal range of a candle work, how each phase connect perfectly with that what we discuss in the theory. And remember that there is no strict alignment between time frame. You can align any time frame you want. The logic will always remain the same. For example, while you are studying a monthly candle, you can use the H4 time frame for entry or structure, clarity, etc. Even you can you can use M1 time frame. There is no alignment of time frame, because every candle, no matter how big or small, behave the same way. So it's all about how deeply you understand the logic. Now if you truly understand the importance of these phases, you will also understand why I explained them before teaching you how to trade CRT, because once you see the logic behind how a candle form, you will never trade blindly again. You will know exactly what's happening inside every single move, and I can confidently say that now if you paid attention till now, you already understand more than 40% of what CRT truly is. That's how powerful this foundation and this concept is. Remember that your entire market is built on candles. So every prediction we make, every setup we take, every move anticipate is based on how candle behave. That's why understanding the behavior and study of candle is the heart of CRT, because in the end only two things happen. with every and each candle. It can either be sweep or close. It can sweep above or below the previous candle high or low, or it can close above or below the previous candle high or low. That's it. Only two outcome, and that's where the entire theory begin. So now as we continue, you will start to understand why CRT is not just a concept. It's a complete logic that control every move of the market. So this was a short example of a monthly candle that how actually monthly candle look on weekly time frame, and how you will backtest this idea in your chart. So you can clearly see this is the week 1 accumulation phase, this is week 2 manipulation phase where the low form, this is week 3, and this is phase 4 where the high and close of the monthly candle usually happen. I hope you understand this better, and that was our lecture number 1 of CRT mentorship. Today we learn about age, what CRT actually is, how a monthly candle form, and how we can treat it, how we can treat a monthly candle as a range. So trust me, the entire market is built on this concept. There is nothing beyond this. So if you truly understand this foundation, everything else will start to make sense automatically. So if you give your full focus, time and attention to this mentorship, you won't need any other course, book or teacher after this. I am giving you everything you need to become a proper trader. But remember, it's a two-way effort. I will give you my 100%. I will support you the way you need, but if you don't want to learn, I can't help. So don't waste your time, take this seriously. And if you don't understand something in this video, watch it again and again until it becomes clear. Remember that repetition is the key. So every time you rewatch, you will notice something new, something deeper. I am here for all of you. If something still confuses you, just text me, I will help you out. Now before we end, this is just the beginning. In the next lecture we will go deeper. We will talk about how to take entry and monthly candle, when and where to take, and about time frame alignment with monthly candle, and about how and when to step in using CRT step by step in the right order. So for now your task is simple: backtest what you learned today, mark monthly candle, identify the range, identify the phases, watch the accumulation and manipulation phases, and see how the story unfolds inside each candle. Remember that you only need 5 to 6 perfect setup in a year like this to make a difference. Even if you are a day trader, this concept will guide you. This concept will give you a clear bias, a clear order flow. So study this lecture deeply, watch it 10 times before sending me your assignment. I will share about the assignment in the group, and honestly watch it at least 50 times before lecture number 2. So because the more you watch, the more your vision will sharpen. Okay, so all right everyone, that's it for lecture number 1. I hope you learned something valuable today. I will see you all soon in lecture number 2. It is going to be more amazing, more better, more powerful than this. Until then, stay focused, stay safe, and keep learning. Take care everyone. Have a good night from here.